Welcome to this week's live ASX strategy session. Thanks for joining me. Great having you with me for another show of talking about the charts and looking at the markets. Plenty of stuff to go through today. The ASX, SP500, copper, gold, oil, uranium, and of course, any stock codes you'd like me to have a look at, get them ready. We're going to go through those at the end of the show. Now, as always, everything today, general commentary only, doesn't take your personal situation into account. Having been through all that, let's get straight into our charts. So the first chart this week, as always, is the ASX 200. And it's been a steady pullback throughout the week. ASX 200 was just short of breaking the this high from mid-February, and that followed a 20% rally over about 9 weeks. So it didn't quite get there, and now we've got this pullback happening now. And this pullback is actually a notable milestone. I'll tell you more about that in a moment. It might surprise you what it actually means. We'll also look at what's been developing in the US, and I'll show you an important clue from another market. And I think you'll find that interesting as to what it suggests could be coming up next. Before we get to that, though, let's start with this latest price action in the ASX 200. So prices peaked Wednesday last week, or Wednesday a week ago, and it was just 0.1% below the all-time high. But the official records will show that the ASX 200 actually did hit an all-time high last Wednesday, and that's because the charts that I use here they include the overnight price action from the futures market, and those extra trading hours can make some small differences to the chart. Generally, the charts are a close match, but when we're talking about like highs and lows, they can make a difference. So, yeah, on the futures chart, we're not at an all-time high. On the official ASX 200, it did make an all-time high about a week ago. What's notable about the pullback is that it's the longest pullback since the April low. So come down here from the April low, look at all this rally on the way up. What we've seen here is actually the longest pullback. So just to clarify, it's not the deepest pullback. That happened towards the middle of April. Strong rally, then a quick large pullback, and then up and away. So that was the largest pullback, but this is the longest time between the market making new highs. So you just look at these pullbacks: short pullback, new high; short pullback, new high, and so on. That continues all the way up. So is this the long-awaited pullback towards the moving averages? If you're a regular viewer, you'll know I've been discussing the potential for prices to revisit the 50-day moving average, which is this red moving average. You've got the 50-day and the 100-day moving averages. And I've been talking about that for several weeks. And despite talking about it for several weeks, the markets relentlessly kept pushing higher. The reason I've held the view of a pullback is because prices have been historically stretched above the 50-day moving average. So you'll be familiar with this if you've been watching for a bit. And this indicator shows the percentage above the 50-day moving average market currently is. And if we just mark the current level and we just compress this and move it along, and you can see when prices get about 4% above the 50-day moving average, it's usually a point where there's some consolidation due. And that's been the case over the last few weeks. These prices have been stretched. Now we're getting this bit of a pullback towards the moving average taking place. So is this pullback likely to continue? I think the prospect of a larger and longer consolidation is, I think it's very much alive. And this has been an historic and uninterrupted rally off the April low. I think that what would be unusual would be for the rally to continue unchecked. And remember, pullbacks to the moving average, or say the 50-day moving average, they really are a normal part of rising trends. And what they do is they provide a counterbalance to periods of strength, and then often provide a platform for higher levels. You can see that happening over during the previous bullish phase from 2004. Lots of these pullbacks towards the 50-day moving average. So I think that possibility is very much in play. Looking at, I do want to have a quick look at the equal weight, the ASX 200 on an equal weight basis, and I think this is another reason to give weight to the prospect of more consolidation. So look where the equal weight appears to be stalling, and you can see this blue horizontal line. So that's a key technical level. So what it does, it takes in the high from February early this year. There are a couple of previous peaks from late last year, and if we compress this chart, there's the high from 2021, the December 2021, January 2022 high. So it's an important point where or an important technical level where prices are just stalling at the moment and pulling back. Another interesting feature is that the equal weight has had a larger fall than the ASX 200 on Thursday. You can see Thursday's move. It's a larger move than we saw in the ASX 200. So this shows, at least for me, this shows that there's selling across the broader market, and that the relative stability in the ASX 200 is it's probably due to a few of those larger cap stocks. So the rank and file is seeing a bit more weakness just over the last 24 hours. And we can see this also playing out in the small ordinaries and in the emerging companies index. I'm going to come back and look at both of those a little bit later. So bringing it back to the ASX 200. And I think the overall structure here, this overall structure remains positive. We've got these rising moving averages, the 50 and the 100-day moving averages are both rising. Price is above the moving average, and it's been established above the moving averages for a number of weeks now, actually a couple of months, 2 or 3 months. Every bullish phase is associated with prices above rising moving averages. So that's a good backdrop when you consider that. I think from that perspective, I'm happy to stay long the ASX 200 index. I'm happy to stay long individual stocks. And as we've discussed over the last couple of months, it's really been that process of gradually buying on the way up, and rather than watching the market rally, then coming in late and having a top heavy portfolio near the all-time highs. And I think that's the way to continue playing this. I'm happy to hold what's been working, keep using wide trailing stops with the aim of seeing off any further consolidation that may potentially come back towards the 50-day moving average, or maybe it just does more sideways work. We don't know. We just need to see how that plays out. But the wide trailing stop, the idea with that is typically below the 100-day moving average. It just gives stocks room to move and helps you see off consolidations and then hopefully stay on larger upward trends. But I think unless an opportunity particularly stands out, I don't think we need to rush to buy this week with prices pulling back. And I certainly don't want to be chasing stocks that have run hard over the last few weeks, last month or two. I'd like to see what this next pullback looks like before significant further investment. I'm looking for signs that the dip is being supported. I think that's the key here. And if this dip back here is supportive, looks corrective, then I think that could then potentially lay the framework for higher levels in the weeks or months ahead. So important price action to watch coming up, I think. Going to move over to the US market now. We've got the local stocks and the small caps and the commodities after that, or the local small caps, yep. And but look, if you're getting some value, please hit that like button. Please leave a short comment. Hey, just thanks for the video, something like that. Tell me what you think the market's going to do. Is this a short-term pullback or something longer lasting? What do you think? Let me know in the comments below. Always interesting to see what you're thinking. All right, let's move over to the S&P 500. And S&P 500, well, it's been another resilient week in the face of ongoing uncertainty, and unrest. If this were a bearish environment, you'd expect that this level of uncertainty would often be the fuel for a larger sell-off, but that's not the way this has been playing out. It's been the S&P 500 has been resilient. It's been holding onto those gains, and the dips all the way up have been shallow. As it stands, the dips are being bought basically the whole way up, and so the path of least resistance is and remains to the upside. It has been the case of buying the dips, not selling the rallies. So that path of least resistance, as I say, remains to the upside. But while the S&P 500, so you look where the S&P 500 is, look at its all-time high, something similar happening in the NASDAQ. So while those two popular headline indices are at only about 2.5% from all-time highs, the broader market isn't keeping pace, at least at this point. So, for instance, if we look at the Dow Jones Industrial, also you could look at the equal weight. They're both about 6.5% from their all-time highs. So the Dow Jones has been trading along its moving average for about the past month. Now, of course, the Dow isn't a broad measure of the market; it's only 30 stocks, but it's still an important index to watch, and it is different to what we're seeing in the NASDAQ and S&P 500 with those markets closer to their all-time highs. We're seeing something similar in the equal weight. So if we look at the S&P 500 on an equal weight basis, it's been a case of this market moving sideways as well. Unlike the Dow, the moving averages here have crossed. So just quickly going back to the Dow, you can see these moving averages haven't crossed to the upside yet. So I think the underlying tone of the Dow, it's positive, but there's a clear lag. And back to the equal weight, you can see the moving averages here have crossed. So it's a little bit more advanced. Consolidation is occurring along rising moving averages. So I think it's generally positive. So I don't think it's a concern, but I do think there's a pattern of consolidation that could continue for longer. And we're seeing it play out in the Dow and the equal weight, and that could then continue to flow through to the main S&P 500 and NASDAQ. I'm also watching what's happening in the European stocks. Now, this is interesting what's happened here. So this is the Euro Stoxx 50 index, the largest 50 stocks in Europe. And just look at the price action here. So prices have closed below the 100-day moving average for the first time in nearly 2 months. Here's the last time prices closed below the 100-day moving average. It was back in late April. And now here we are again. And it's been a fairly sharp pullback over the last couple of weeks. So the Euro Stoxx is off nearly 4.5% since Wednesday, a week and a half ago. So that's a pretty sizable move, especially when you look at the stability we're seeing in the S&P 500 so far. And this is often what happens after big advances. So had this big rally off the April low, and now we're getting the pullback. And as I say, this is what often happens after those big advances. There's a proportional pullback. And that's been so far missing from both the ASX 200 and the S&P 500. I wouldn't be at all surprised to see what's happening in the European market also happen in the US and the local markets, and that is a pullback towards the moving averages. Coming back to the S&P 500, so we'll leave the equal weight, go back to the main index, S&P 500. I'm continuing to play this from the long side. I think the overall structure is positive. Price is above these rising moving averages, and I think the price action suggests that the interest is in buying the pullbacks, not selling the rallies. But like I was saying with the ASX 200, it has been a big uninterrupted rally higher, and there are signs that near-term upside it might be limited, just maybe limited over the near term, maybe the next few weeks. While I'm happy to hold what's been working, I'm not rushing to add exposure unless it's something which particularly stands out. I'm just not rushing to add exposure at the moment, rather being happy to hold what I've got. Much of it from lower levels. And as I'm always saying, I'm managing risk with those wide trailing stops. I think having those predetermined exit points, I think it's a really important thing. That's what I do with my portfolio, with my motion trader stocks, the calculated trailing stops, so it's not guesswork. I think that can make a big difference. Okay, so I'm going to move over to the small caps next, and we're going to get into the commodities. There's some really interesting stuff happening there, particularly with uranium. We're going to get to that in a moment. But of course, that wraps up the free section. If you're not a strategy session member, there's a link below. Click that. Come on in. Doesn't cost you very much, and we're going to talk about a whole lot of interesting things. And you can ask me about stocks you're looking at yourself, and we'll get up the chart and talk generally about those. So if you're ready to spend a few dollars to do that, link below, click that, come in. You won't get the live session, you get the replay, and then next week, hopefully you'll be with us live. Okay, so let's go over to the Russell.